Sol, my friend. Okay, so it must mean we're live and people can hear at least. Great. Okay, so let's get at it. Start with TradingView. So we're going to cover a few topics today. Actually, we're going to cover TradingView. We're going to cover Trading Light, and we're also going to cover Bookmap. And I think, I guess as a trader, you can sometimes get lost in a field of too many systems, too many platforms, too many ideas, and I think I've been on a bit of a search to figure out which one or multiples of ones can kind of give me the best outcome for what I look for, at least as I'm a trader. So we're going to start with TradingView. So as always, this is more of a review. Where are we at? What kind of ideas can we see playing out? And then ultimately, why do we think the market will move one way or the other? Well, look, I mean, we have to keep going back to this same thing, but not not a lot has changed, unfortunately. I don't think so. This is FTX. We built our kind of move to the upside. Is this the bottom? Possibly. We've seen our 5 wave to the upside here, comes back down, and then we see this huge move to the upside. A little bit of a consolidation phase, and now we're in this really nice range. Now, what I like about this range, and why I think we'll probably maintain this range maybe over the weekend, however, not a guarantee. Usually weekends are quite slow in terms of volume. Volume likes to drop down, but in this case, I think, I don't know, we could anticipate some fireworks because there's something called Fibonacci time sequence in a game. We'll try and cover that, which suggests that the middle of the weekend we're going to see some real fireworks. So how do we want to look at this? Well, this has been a nice range. If we take the parallel channel, and I would probably say like this, it's probably fair. Let me just get that on shift to about here. Now, my trading idea, honestly, I would trade this range. I wouldn't really change anything until we break the range. Now, what do I mean by that? That means that because we've been in such a consolidated phase. Now, I heard, by the way, as a kind of segue, and I didn't really give this too much thought, but as I really contemplated a lot, it actually holds a lot of sense. This was the FTX fallout, right? Obviously, and then we had that huge move to the upside, but the mean range, you could argue, was here, right? This is that range before we moved. Yes, we had this little bit of a fall down here, but we kind of came back up, and then we kind of lollygagged around. But this might have been, without this FTX fallout, this might have been a range that we stayed within. Because I don't know if you know this, by the way, but if if you look at the stats, there's only two types of movement in charts. There's a range, or there's a trend, right? So when you're trending, you're either trending up or you're either trending down. Sounds very obvious, of course. Or you are trading within a range, which is kind of, up and down, a little bit spiky here and there. Much more higher percentage of the time you are in a range than actually you are in a trend. So depending on how you trade, for me, like, I'm very much a contrarian trader, which means that I like to trade against the trend. So that actually goes in my favor. The hard part for me is identifying where's the top and bottom of the range, and moreover, if I'm trading, let's say, on a swing trade, how long am I prepared to wait? Do I trade 4 hours? Do I trade on a daily? Do I trade on a weekly? Whatever time frame I want to use really determines where that range is. Now, you can obviously get down lower and then trade within a smaller range, but just anticipate that there could be a breakout, and etc., etc. So I've been kind of flip-flopping a little bit between an idea of trading on I guess, a more swing trade perspective, but lately holding on to the idea of more kind of day trades, and I find that's a nice balance to get right. So right now, my narrative is bearish, if I'm honest. Surprise, surprise. And it's only because if you look, where are we? Right. Let me just get rid of this channel right now. In fact, I'll do this via here, right? Someone is just popping in to see me. Hang on. Okay, fantastic. No, I haven't found it. Brilliant. Okay, I'm don't too large while your children come in and say hello. Anyway, let me get rid of this. So yeah, what I always like to do is to just find my foot, right? And this is good for anyone to just get a sense on where you are with certain things. Now, I'm going to do this really, really quickly, okay? Just because it will benefit you to kind of look at a specific time in a chart and then kind of try to figure out, am I right or wrong in terms of the direction? Now, I use Elliott waves. A lot of people who come in our server will know I'm a big fan of structure in general. It doesn't always play out, but it gives you a playbook and a framework at least to work against. So we'll use the 3-day for now. And actually, do you know what I will do just to keep it nice and clean is I will make it like that. So how would we identify what type of system this is? So I'm going to say, well, if I'm going to use the top here, right? Because this is probably the end of a cycle, whether it's looks like a zigzag ABC correction as I would see that. But I would say, if this was your first wave, okay, you've got 5 waves that fit within there. We'll come on to that in a second. We've got our ABC correction there. Then we've got a huge motive wave down, which again, you could probably count another 5 waves somewhere along that. Now, Elliott wave theories are very fractal in nature, meaning that you may start off with a really, really high time frame, and you may not quite see a Elliott wave or an Elliott wave within that Elliott wave. So if you've got like a 2 to 3, you want to see 5 waves here. It may not be so apparent on this 3-day time frame, but if you move into a smaller time frame, like I don't know, 4-hour or an 8-hour or a 12-hour, you may see them a lot more clearly. So don't always think if you don't see an Elliott wave at a time frame you're looking at that it's not always present, because it can be. It's just that you need to zone in onto your time frames. Now here's the debate, and this is why my narrative is still down, right? So it would be very easy for us to say, well, there's your 4th wave and there's your 5th wave, and I would grant you that 100%. I would say, okay, that's a fair assessment. However, it doesn't feel like that is the way. For me personally, I think if you know anything about Elliott waves, you tend to find that the 4th wave is a really messy. It can be a WXY, which is like a double ABC pattern. It can be a single ABC, but it can be a messy version of that ABC. So I would say like this, that this was a ABC correction on our 3rd wave to 4th wave, and we're still anticipating a move down. I can be very wrong, by the way. Nothing that I'm saying here is anything other than my interpretation of how I read things. On top of this, obviously, we've got to think about the structure. So we've got 5 waves, let's just say, in here. And I'll do this very crudely just by saying, well, you could say, okay, that could be 1, this could be 2, this could be 3 because it's a move down here. This could be 4, and then this could be 5. And that's all subjective, by the way. That's not absolutely clear, but for me, it does show a wave of motion. I think sometimes if you stick to the rules too much, you're going to get locked in this idea that when the market goes against you, because you've got this principle of where these rules should lie, that actually, you know what, that's not worked, and you get wrecked. I think Elliott waves are good, but they should only be used as a framework and a reference. So it's kind of eyeballing. Does that look like a wavy pattern to the downside? Well, it does. It kind of feels like that wave's up there, that kind of wave's there, that wave's there, so on and so forth. And can you count 5? And that's kind of how I think it looks quite well. Then we've got our ABC correction. So A, B, C. And that's probably more of a flat wave, a flat correction rather than a zigzag. And then you've got 4, and then another move to the downside, 5. Now realistically, what do the rules state? 3 cannot be the shortest Elliott wave. Well, I'd probably say 1 was the shortest there, so you can suggest that is the case. And then again, we're looking at another potential flat correction. So if this is the start here, we've got our A wave here, B wave down there, and then our C wave up here. And again, just looking at that as a range, it's an AB, for me, feels like an ABC correction. So based on that, right? And now the fact that we've kind of come back and reclaimed this pre-FTX position, you can kind of almost signify that as not part of the plan. Let's just say. So so let's use that as a guide for a second, right? So we've got, you know, A, B here, and then right now was C, right? I don't like to use that line, so let me just get rid of them real quick. And the C is, you know, where are we going to move to? Where's that place where we're going to go? And there's a few ways in which we can kind of, you know, look at that. So bringing this in, I'm going to go to the 12-hour, I think. Ooh, not the 12-month, 12-hour, right? We're going to come on to some better stuff than this. This is just the contextualized stuff to bring it into the picture. So again, looking at things, we want to start to identify, you know, where can this move go to? Well, again, if we take swing low to swing high, well, there's our swing low, there's our swing high, and then we can come back down to here. So we can use, you know, the Fibonacci retracement. So we I put the magnet tool on because you want to be quite precise with this if you can. Swing low to swing high, back to swing low. And you've got a couple of areas, haven't we? I mean, look, this is our liquidity here. I'm just going to put that there. I'm going to call that liquidity. So we've got a nice liquidity zone right above that peak. We're not quite there. If you look where we came to, maximum was 23,868. My feeling is, and by the way, for this to still stay as bearish territory, even if we come up, claim this liquidity, and then move back to the downside, that would be nothing more than a corrective 4 wave still, as we've just mapped that out. So that's what we've got to look for as well. Sometimes your corrective wave can come past A, and therefore you clear the liquidity. Well, if you look where potentially C would be, well, we've got, you know, if we take the fib extension, you've got your 1.618 to 1.615, which we know as the golden pocket, you know, just in this zone here. So another interesting area. Now, I don't think that's not going to come up as high as that. I absolutely don't think it is. If anything, I think personally the maximum we'll see is maybe a clear out of this 25,199 area of a liquidity grab, possibly. But the concern that I've seen, and I'm just going to get rid of this, and we're going to focus back in on the shorter stuff, is more on the fact that, so we had the push up, right, with very, very little rejection. We had this, you know, this move that solidified around here, and then we had another push to the upside. But now you can see move 1, consolidate, move 2, consolidate. And now anyone who knows me knows I like my volume profiles. What I found was really, really interesting. Let me just show you how I create these, because I think it's an important thing. So I'm taking right now, I'm going to take the entire range from the top, which was the top of the actual total BTC, okay? And we are going to move the arrow of time so that the maximum top before we start to break down is here. We're going to go to the daily because I think it's only befitting, okay? And then we are going to go with the, actually, have I got it present? No. We're going to go with the fixed volume profile, right? Visible range, rather. Now, what I really like, so what I will do is if you look closely, I hope you can see it on this. I don't know if this is the case, but you can see where I've on the right hand side got daily VRVP, it's because number one, I'm on a daily time frame, and number two, these lines correspond with the peak of these areas. It's where, you know, effectively most volume is traded. Now, it's not conducive to have these constantly on your chart. It just looks a bit too messy and stuff like that. Now, I don't trade on the daily range, so it doesn't matter that these look really, really quite close together right now. But also, you want to be able to identify where's the value area low and the value area high, of course, as well as the the point of control. But the really interesting thing about this is now taking the top to where we are right now. So you can almost guarantee that you're not going to be expecting an awful lot of movement one way or the other in terms of your volume profiles, because it's covering such a longer period of time. So I'm going to take this off the screen, and this really made me like go, wow, okay, that was really interesting. Perhaps we should have seen that, but we live and learn. But I'm going to go to the 15-minute, and we're going to zoom into, well, actually, no, we're not going to do the 15-minute. I just want to do something quickly by going to the 2-hour. I'm going to get rid of my profiles, and I want to just, have I got my parallel channel back on? I have. Okay. I thought it was really interesting, right? If we go into the 15-minute, right, this is that little parallel channel. We're just at the top, right? Now, by putting your volume profile, so what we're saying by the volume profiles, we're saying the stickiest areas in the chart. That move to the upside, that broke out of the parallel channel. I mean, in terms of dollar accuracy for that move, and it was a liquidity grab. It was, short, basically liquidating anyone who was short at that time. We're going to show exactly what happened in a second in terms of how open interest and bigger players came into the game and effectively wrecked everyone who was long, and because there were still people long, and we'll show you this shortly. But I thought it's an interesting dynamic to see that the point at which the bigger players came into the field was right at a daily ranged volume fixed volume profile. So that's just nothing more than mapping out lines on a chart and figuring them out. What I've started doing, just if anyone wanted a bit more insight, is starting to not put them so much as a line, but more as a zone, which just allows you to more like average into an order in a zone rather than just focusing specifically at a line in the chart, because you can see oftentimes it will come up and down below and it will range within that little zone. So they're nice to kind of use as a template to bounce between zones. So it's like a zonal level, if you like. But just moving over to something a little bit more interesting. Let's focus first on this. So this was the Asian session that occurred yesterday, and I was facilitating that we were going to get a move to the downside. If we go over to Trading Light, you'll see as we move over, I mapped out a couple of things. So here's what we're looking at, right? Okay, go away. Right, here's the price. This is the same price in the Asian session. Okay, so the price moved down. Sorry, my daughter's just coming into the field. Jesus, sorry guys. Just hang on fire here. So I mapped out, sorry, I didn't map out. I looked at the charts, and you can clearly see what I really like about Trading Light is it's almost like an amalgamation of Bookmap, which gives you the order book with a heat map, yeah, like what you're seeing here. Let me just show you Bookmap a quick second so you understand what I'm talking about. When you look at Bookmap, as an example, Bookmap will show you, yeah, a heat map based upon, the relative orders. So the more orders within a specific time frame, the more hotter or redder you will see on the chart. What it doesn't really show you is in the traditional. Okay, yeah, the traditional sense that you like to see charts when you're looking at candlesticks, and we all like to TA in different ways, but ultimately you like to look at candlesticks and patterns in order to kind of understand things a little bit easier in your head. But when you're looking at Bookmap and you're seeing these different ideas, what you're often flipping between Bookmap, looking for key levels, where the big orders being placed within the chart, where's the big sell orders, where's the big buy orders. Like, look on Bookmap right now, you can see there's a big buy order at, what would you say that is? Let me just see if I can move that up. 22,500. You can see that there's over 1127 Bitcoin, multiply that by 22,500, and that's the total amount of Bitcoin at that area. So do we come down and get that is an interesting question. But so this bookmap tool is fantastic for telling us, you know, where are the big orders set. And just as a quick overview, as I say, down the bottom hand side are all of the limit buys. So these are, if you were going into Bybit or Binance or whatever, you know, platform you use, you are putting in your limit order as a fit and forget. If it comes down and fills, fantastic, your order's filled. This is what these all are down here. These are limit buys. At the top side, these are all the limit sells. So if you are selling or short in the market, you will see all of the sells. So as a market maker, you want to hunt where liquidity is, and I say this oftentimes because it's much easier to trade, specifically if you're a bigger player and you want to move money. You want a liquid market. You don't want to get hit by spreads. You don't want to get hit between bid and ask. Moreover, you want liquidity so that you get out at the price that you want to get out at, and you're not getting hit by the spread. Oh, this is so unprofessional. Can you go downstairs, please? I'll come down in a second. In real life, right? So then, what's next? So, yeah, Bookmap is great. Shows you all these infos. Also shows you the session volume profile. So what I've just looked at in the trading view is the visible range volume profile. Well, this is exactly the same. It's taking this visible range, what you're seeing here, and mapping out where the most traded volume's been. It's for the session rather, not just here for the, since you know the market opens, let's just say, which would be, I think it's 1 a.m. GMT, which is the time frame I'm in. So you can see 113,449 Bitcoin have been traded at that 22,950. So you can see a lot of Bitcoin was traded there. But then going back to trading light, this is almost like an amalgamation of the two. So we've still got our nice candlestick pattern, which shows you price action. But we also have the heat map here. Now you can change the intensity of the heat map. You know, you could to show where the large orders are. The other thing that I really like, I think, is it here? Order book, is you can actually see. Let me just bring this down to where are we? If I bring this up, you can see now. Look, you can see at 23,283, we've got 679 Bitcoin. That's a really nice eyeball thing to be able to just spot on a chart. 23,283. Now, when you look at where that is, bring this down a little bit. Now, you can see as I'm moving up, you can see this line moving up here. So it shows you exactly where that is on the chart. So them orders are up here. Now I think what it's looking at is the previous orders here. You can see another thing that I like is it zooms in. You can see the box that comes up. It zooms in to show you what the orders are. So anything highlighted in yellow is essentially how many BTC are going to be traded at that area. So yeah, 804 was the last known one. But you can see as a spoof order, let's just say that's now been removed, because once you get past, what time's that? 1:45, it was essentially removed. So you've got to be careful. Actually, no, that's a lie. It is live because it's this area here. Now, just a little bit of an overview about what I kind of looked at. So as I say, we see this here, right? And this is the mentality you've got to think about when you're trading. We see this huge line here, right? This wall of BTC, 1.3k. Yeah, it didn't move from, like, this is the Asian session, like 1 a.m. in the morning. Is that 12:45 GMT? So Asian session just prior to the Asian session opening. Now you can see the price, the moment this starts to come into play, you can see the price starts to gravitate towards that area because it's a big amount of liquidity. A lot of transactions can happen. But here's the kicker, right? So what we've got here is open interest. What is open interest? Open interest is if you've got a central exchange, is money leaving the exchange or is money coming into the exchange? Red signifies that money is leaving the exchange. Yellow signifies that money is coming into the exchange. So you can almost think of this as leaving money. Could be profit taken, could be liquidations, can be, you know, anything that where money would come out of the exchange. Money coming into the exchange could be, big buys, transactions that are buying into the market. So you use that idea to figure out and interpret what you think might have happened. So is a good exercise to kind of think about it, right? So we've got this huge wall of BTC limit orders. Yeah, remember these are limit orders, so these are unfulfilled orders. As the price is up here, prices come down, huge amount of money leaving the exchange. Why? What happened? Why is money coming off the exchange as the price comes down? Well, probably a lot of people getting wrecked in terms of those who are still shorting at this bottom price here. As buys are coming in, the price is coming down. If you've been longing at this stage, you're wrecked. So this open interest decrease here is longs effectively getting wrecked. That's liquidations happening in the market, and you can see what happens. We come down here, big players absorbing that aggression as the market comes down. All the longs get wrecked. See you, bye bye, and then the money comes back in, and we get a push to the upside. But here's the kicker. This is the CVD. What is CVD? CVD, in a simplistic term, is buy or sell pressure from aggressive orders, market orders, or something. Well, everything is effectively a market order, but market orders in the as we see it. So let's just draw some ideas of how we can capture this divergence. So let's get our draw tool out. We can see money. Let me get my draw tool out. Sorry, so you can see price moves up. You can see open interest comes up. Now we know open interest is new money coming into the exchange. Let me just take the magnet tool off. But what do we see? The continuation of sell pressure, okay? Yeah. So price goes up, new money comes into the market, people are still trying to sell. So even during this phase here, the sell pressure was still in from the market. What happens is when you get a lot of sell pressure, but bigger players continue to absorb via limit orders, it's just when it runs out of steam, it gets exhausted, and then you see a price change to the outside. So if you were trading this, how would you have traded this idea? I mean, look, I'm not here to give financial advice, but when you see a wall, when you see a wall like that, a nice idea would have been really high leverage, really tight stop loss. I mean, on this one, you could have had a stop loss of 2%, right? Something as low as 2%, because look, literally, the price at which it got reversed was 22,505. The price underneath that was 22,496. A 2% stop loss would have seen a beautiful move to the upside. Here again, I sent an image earlier on. I think was it on the. Let me just check what the time frame was. Yeah, I sent an image into the Discord server to say, keep your eyes peeled on these two areas. So that these two had formed. You had this formation here, and then the formation down here. The price was here at this stage. So I said, interestingly enough, keep your eyes peeled on here. What happened? This candle comes down, tags the value to the dollar. Again, that was around 755. So not as significant as your 1300 Bitcoin. Still enough, still relatively more significant than anything you'd seen, over the period of that last session. Comes up, hits the point, and then reverses back to the upside. Has another go, so then, do you take profit? Of course you would take profit if you were in a high leverage short, really tight stop loss, then you'd take profit on that one, and get a couple of, well, it was a 200 point move. That would have been a nice move. And then the second one came in again just underneath, again comes down, hits it to the dollar, and then goes back up to the upside. And actually, you know, if your stop loss was here, even when it come back down to retest, still didn't break that that zone. So then we see the push then to the upside. So it's a great tool. This tool is more of a identification of, so if you know, let's be completely honest, you're paying $50 a month for Bookmap, right? Then, you know, if you've got, I don't know, TradingView, you're paying another amount of money for TradingView if you've got the pro license. All these different tools that providing data in one way or the other. For me personally, I think CVD, open interest, really, really important. If the aggregated data and they're showing you, you know, where bigger players are coming in and stepping in and absorbing orders, because that's a fantastic way for sniping, you know, getting in and getting out. Really tight stop loss and accepting that if it breaks that zone, fine. The bears or the bulls are in control. You accept that and move on. Really tight stop loss, 2%. You're never going to be, you know, too far out the money. But if you get a move like both of them, you know, which really turned into be winners, and then that one here, you know, which is another one that would have been a fantastic win, then it's worth the loss, because that, I mean, the risk to reward ratio on that, I mean, I don't even know how to do the risk to reward ratio on this specific tool, but you know, you're looking at a nice move to the upside there. So I do like this tool a lot, and this is like for the gold package, which is this what we've got. You know, you've got open interest, we've got CVD divergence, which is nothing more than suggesting buy pressure or sell pressure. It's a delta thing, yeah. So at a current price, is the more buys or more sells in volume that's getting exchanged, and if there's more buys than sells, the value will be green and it'll be a plus number, and if there's more sells than buys at that price and volume, the value will red, you know, it'll be a negative value. So that's just a very quick visual way of saying, okay, well, there's more sell pressure. You know, take Bookmap as an example. How Bookmap does it. You know, right on this, we can go right the way back, you know, as far as we need to. Yeah, which is good because we can see all of these big liquidity zones where money's being traded. On Bookmap, you can do it, but it's an absolute exhaustion on processing thing. If you don't have a decent enough PC, honestly, it's just pointless, because the resourcing is just a nightmare to deal with, if I'm completely frank. Now you can see you still got CVD here, and again it will show you buy or sell pressure. Right now we've got more buy side pressure than sell pressure. That would indicate that, you know, we're trying to push the price up. However, the thing you're going to have to look for is, how is price relative to that pressure? And I say this all the time, if the price isn't moving up relative to the pressure, like if the CVD now starts to move up to the upside, up here, continues to the upside, I'm going to be watching this zone for the start, right? It's where we've got more liquidity. We've got 577 Bitcoin to be traded at this point. If the CVD comes in, that's buy pressure, aggression coming into the market. Remember, not limit orders, but aggressive market orders coming into the market. But the limit orders are just absorbing that pressure. The CVD is going to come right to the top, and then open interest. What will happen? Everyone will start longing. Open interest will start to drop as people get wrecked and liquidated for the shorts, and then it comes back down again. That's exactly what we've seen on that Asian session. It's no different, by the way. So I think in your trading game, these are for me personally, more technical tools that I think can go a long way to give you a sense on what the market is doing, at least in real time. So yeah, I don't think there's anything else I really want to talk about, other than maybe let's just finish just on. By the way, if there's any questions in the chat in YouTube, feel just drop me them in. But as I say, I think right now, yeah, we're in a bit of a move to the upside, a consolidated phase. Again, if I take, you know, you quite happily just take, these are all very basic concepts, but just looking at where that, you know, I liked, even if we say the top here, possibly that would be the top. You know, we've got the 6, the golden pocket here. Again, it's a nice zone in terms of where's this? No, it's not that what I want. You know, if you are a zonal kind of guy or gal and you like areas of consolidation, let's just say, this would be a nice zone where you would anticipate a move to the downside. Obviously, on top of that, we've also got our golden pocket here. We could probably look as well if we add our pivot points. I don't think I put them here. Let me just add the pivot points in. Let's see if we get any further confluence to move to the downside. Let me see. You know, I haven't even looked, by the way, at anything like MFIs or you know, oscillating tools to figure out where we are, overbought, oversold, all that kind of stuff. I'm just right now just considering price action. So this is the right now we're on the weekly. I think it's the weekly. Yeah, 7 days. This is our pivot point. Yeah. So how is this calculated? This is calculated based upon the previous week candle. So that take the candle from last week. You look at the open. Sorry, you look at the high, the low, and the close, and divide that by 3. So add the 3 of them values together, divide by 3, and that will give you your next week's pivot point. And then you take your R1 and your S1, which is essentially your support and resistance, and it is you take your pivot point. I can't remember the calculation off the top of my head. I think you times it by 2. I'd have to look at the calculation, but there's different ways in which you can calculate this. I mean, it's a stand. By the way, this is a standard tool. It's a very standard tool anyway that they've been using for years and years and years down in the old pits, where they just figured out before you had lots of fancy technical indicators. They used to just they wanted to know what the next day or week or month potential range might be. And so they used just some basic calculations to figure out what the previous data looked like, to look at a range in which it might trade to. And this is how they got these kind of R1, R2, R3, R4, and R5. So this is the weekly range right now. You can see, again, just where it was. So the pivot. So we started the week here. The pivot hit the pivot point. Lovely. Kind of just lollygagged around the S2, and then came back up again. Started spending a little bit of time around S1, and then we've come back up to the pivot point again. So it's a really strong. It's a really strong thing to just to look at and keep your eye on. Again, just rejection right at that R1, and incidentally, that R1 is also a volume profile as well. Is that the one I want to see on the daily range? Let me just double check where that went to. Oh no, that's that one there, isn't it? But that is R4 consequently. So on the weekly pivot point, right at R4. Again, from a confluence perspective, you've got R4, you've got obviously a daily pivot point, and we've also got the top of the Fibonacci extension tool. So with all of these things, it's always about kind of try to map out. This is more around for me anyway, swing trading, trying to map out an idea where the direction could go. And no one knows, by the way, no one can say market's going to go up, market's going to go down. You just have to have a plan for either way. Now, how can we look at what the monthly looks like? So let's just have a look. If we go on the monthly, let's see. It's going to give us a much bigger pivot. So let me go 4 hours. Okay. You can see even on the monthly. I mean, look, the month started here, right, which was January the 1st, and we just volleyed through every single pivot point up to, you know, R5. Pivots only go to 6 in this. I mean, they can go higher, but usually you don't anticipate these pivots going any higher. And then, yeah, we've broken through that. So, you know, we are coming to the end of the month now, so you can almost anticipate the next pivots are going to be, you know, right up here. But I can imagine some of the support levels will get taken. So yeah, I mean, there's it's interesting. But what would be my trading plan? So right now, again, I'm not thinking too much about going any longer. right now. I think I'm looking specifically at the fact that we have seen, even just by price action alone, super amount of exhaustion. We've seen big move to the upside, consolidation, big move to the upside, consolidation, fake out to the upside, slam back down again. That tells you a lot, by the way. You looked at the volume. If you look at the volume about how that responded, I mean, I mentioned in the server that it didn't have any of the hallmarks of the previous pumps. The previous pumps were non-stop. They were just constantly moving. There was no let up. Even this little small kind of consolidation, we didn't really get any breakouts in this consolidation phase. But this, you could argue, was a breakout. Where did we get slammed back down? Right to the daily VRVP. Of course, we have got the FOMC meeting coming up shortly, so that might throw a bit of a spanner in the works. But volume wise, I don't think we're going to see anything too erratic at the moment. So my day trading plan right now, swing trade plan would be that I'm anticipating, a longer short, a longer term short from here, and I'm going to be looking around this 21,500 as a TP. That would be where I think we should anticipate getting some what would I call it? Stickiness, right? So that feels like a magnet area where we're going to come back down to, just because we've got the golden pocket. We've also got this kind of area where we really struggled to break through until we had the huge move to the upside. So that's what I'll be looking at for that. But from a day trading perspective, I'm just going to trade range to range. I'm going to be really tight with the stop loss. I'm not going to bother too much about going any higher than this. This is going to be, I think that was a talent sign. What I might do is have, on a day trade, short leverage, don't go crazy, stop loss just above your visible range profile, daily profile here. Take profits down here. Same again, looking for a buy signal if it comes down to this level. Take my because of where we are in terms of these kind of candles, maybe just in case we get a small liquidity grab, I might put my stop loss somewhere around here, but nothing too crazy. You're looking at like something like that. I'll be anticipating, which is around a 3-to-1 risk to reward. Let me just get rid of that magnet. Something like that as a potential long. From a short, because again it is there, but it wouldn't be my entry level. My entry is going to be somewhere there, just below the peak of the channel, and again anticipating a move down. Smaller risk to reward ratio on this one, but nonetheless, I wouldn't be going crazy with leverage on this one. This is just until we catch a bigger break. But my main narrative, at least for a swing trade, is going to be somewhere down the lines of again somewhere around here on a longer one. Again, stop loss. I would have TP1 here. I'd be looking somewhere around that 20,000 or 20,200 TP2. That's in this consolidated area here. And then the next one is right down at the 19k area. I'd be targeting back at the point of control if it wants to continue down. So I would look for 50% TP somewhere around here. Where is it? Somewhere around here. This kind of 21,500. I'd take another 25% off at 21,200. If we are going to break through, I'll be looking at the point of control. And ultimately, by the way, as well, this is still bullish structure. This would still be bullish structure as I see things. You're getting this move up, 50% retracement, move to the upside, continuation. Why not? I'm not a bear maximalist. I'm not a bull maximalist. I like to just trade level to level and let the data do its talking. But there's an awful lot of interest and indication that can put forward an idea that maybe we have seen the bottom. Maybe that 15k was the bottom, and now we are moving to the upside. I don't know. I'm not going to try to predict too much into the future. I'm just going to try and look at sound reasoning. Overbought, oversold. structure, market structure. But then from a day trading perspective, using open interest, using CVD divergence, understanding where bigger players might start to absorb, and looking where the big limit orders are, things like that for your kind of day trade. So if anyone in the server is not from, if anyone in the YouTube is not in our server, please come along and get involved. Awesome team, awesome group, awesome members. And that's all pretty much it. I'm going to enjoy the rest of my day, evening, and hopefully you guys enjoyed that. Any questions, comments, whatever, like, subscribe, all that kind of stuff that I'm supposed to say. But if not, it's cool anyway. Just glad that you came along and watched. Peace out.